Today's financial advice is sponsored by Endeavor Private Wealth. Well, Chris McGee, managing partner at Endeavor Private Wealth, is joining us for our weekly segment on investing. Chris, good morning.
Good morning, Dane.
Well, Chris, I'd like to talk to you about your perspective on money market funds today, which I understand recently hit record levels with investments totaling $5.4 trillion.
Yes, you're right, Dane. Inflows into money market funds, also known as money market mutual funds, have been very strong due to a number of factors. Market uncertainty, instability in the banking sector, lower rates on savings instruments offered by banks and credit unions, and an inverted yield curve in which the shorter term yields are actually higher than some of the longer term yields.
Okay, because I remember like not too long ago pundits were saying cash is trash, but is now suddenly cash is king?
Interesting expression. However, I don't agree with either. I mean, individuals and businesses will always have a valid need and reason to hold sufficient cash reserves. But for long-term investors, relying on cash to generate a king's ransom isn't a likely prospect. It wasn't all that long ago when interest rates were extremely low and money market funds were offering paltry returns. Then inflation roared its head and the Federal Reserve began raising interest rates from near 0 to 5% in a period of 14 months. Money market rates have also increased substantially and have distanced themselves from the interest rates paid by many checking, savings, and money market accounts offered by financial institutions.
So Chris, what's the difference between a money market fund and a money market account?
A money market fund is a mutual fund that is required to invest in low-risk, short-term debt, such as government securities, commercial paper, or certificates of deposit. Unlike a money market deposit account at a bank, money market funds are not insured.
And if money market mutual funds aren't insured, are they safe then?
They generally are considered to be safe, liquid, and low-risk investments. However, they are not completely risk-free. They are managed to generate attractive yields while maintaining a stable net asset value, or NAV, typically $1 a share. However, during times of financial market stress, or if a fund is poorly managed, it's possible for the NAV to fall below $1. This is known as breaking the buck, which can be very disruptive to investors and cause turmoil throughout the money markets, often leading to government intervention. Now, that hasn't happened since 2008, but you can never say never again. Like any fixed income investment, money market funds are exposed to inflation risk. There's also credit and liquidity risk. So it's important to understand the composition of the fund. And funds charge management fees, which are included in the daily calculation of the 7-day yield, a gauge of the current interest rate the fund is paying. After years of having to cut or discount their management fees because yields were so low, money market mutual funds now are averaging close to 0.25% for their management.
And what happens if we don't get an agreement in Washington to raise the federal debt limit before the government runs out of cash?
Certainly nothing good will happen if the debt limit is not extended prior to the X date. It could mean that the U.S. will default on its obligations, which may include short-term treasury debts, which are often held in these money market mutual funds. There's the reason why the yields are so high on a 1-month treasury bill, because investors and fund managers are demanding a higher rates for the increased risk. Hopefully, reasonable heads will prevail and we won't reach that point, a point that would be unprecedented in the U.S. economic history and which would serve for severe repercussions well beyond the money market mutual funds.
Well, let's definitely hope so, Chris.
Yeah.
And, thank you so much for joining us today. We always appreciate your time.
Thank you.
And, of course, to learn more about Endeavor Private Wealth, visit EndeavorPW.com.